Bitcoin is also a digital currency that uses peer-to-peer technology to operate without any central authority. This means that no single institution or government has control over the money supply and how it moves around the economy. Bitcoin uses cryptography to secure transactions and manage its creation rate, while also recording all transactions on an open ledger called the blockchain. In this video, we will talk in detail about Bitcoin. But before we go any further, make sure that you are subscribed to our channel. Understanding Bitcoin. In August 2008, Bitcoin.org was registered as a domain name, at least as of today. This domain is guard protected, which means that the identity of the individual who registered it is not publicly available. In October 2008, an individual or group utilizing a false name, the cryptography mailing list, was announced by Satoshi Nakamoto at metsdao.com. I've been working on a new peer-to-peer electronic cash system with no trusted third party. This now famous white paper titled Bitcoin, a peer-to-peer electronic cash system, and published on Bitcoin.org would become the Magna Carta for how Bitcoin operates today. On January 3, 2009, the first Bitcoin block 0, was mined. This is also referred to as the Genesis block and contains the text, "The times the 3rd of January 2009 Chancellor on brink of second bailout for banks," which may serve as evidence that the block was mined on or after that date, or as political commentary. The blockchain technology of Bitcoin. Cryptocurrencies are part of a blockchain and its supporting network. A blockchain is a distributed ledger, which stores data in a shared database. Encryption methods protect the data within the blockchain. When a transaction occurs on the blockchain, information from the previous block is encrypted and copied to a new block along with the new data. The transaction is then validated by validators, also known as miners, in the network. When a transaction is validated, a new block is created and a Bitcoin is awarded to the miners who validated the data within the block. The miners are then free to use, hold, or sell the Bitcoin. Bitcoin encrypts the data stored in the blocks of the blockchain using the SHA-256 hashing algorithm. Transaction data stored in a block is encrypted into a 256-bit hexadecimal number. This number contains all transaction data and information associated with blocks preceding the current block. Transactions are placed into a queue for validation by network miners. Miners in the Bitcoin blockchain network attempt to simultaneously verify the same transaction. Software and hardware utilized by miners to solve the nonce. A 4-byte number included in the block header. The block header is repeatedly hashed or randomly regenerated by a miner until it reaches a predetermined target number specified by the blockchain. The block header is solved, and a new block is generated so that additional transactions can be encrypted and validated. How Bitcoin is mined. Bitcoin can be mined utilizing a variety of hardware and software. When Bitcoin was first introduced, it was possible to mine it competitively using a personal computer. However, as its popularity grew, more miners joined the network, reducing the likelihood of being the one to solve the hash. You can continue to use your personal computer as a miner if it has more recent hardware, but the likelihood of solving a hash individually is extremely low. This is due to the fact that you are competing with a network of miners that generates approximately 220 exahashes per second. Application-specific integrated circuits (ASICs) are machines designed specifically for mining. They can generate approximately 255 trillion hashes per second. A computer with the most up-to-date hardware performs approximately 100 megahashes per second, 100 million. There are numerous paths to becoming a successful Bitcoin miner. You can use your existing computer with Bitcoin-compatible mining software and join a mining pool. Mining pools are groups of miners who combine their computational capabilities to compete with large ASIC mining farms. Joining a pool increases your chances of receiving a reward, but the rewards are significantly diminished because they are shared. You could also purchase an ASIC miner if you have the means to do so. The cost of a brand new one is about $20,000. But as miners upgrade their equipment, they also sell used ones. If you plan to buy multiple ASICs, take into account significant costs like cooling and electricity. If you enjoyed today's video, then feel free to smash the like button and subscribe to our channel.